Hello, this is Ahura, and we'll be with you to have a short review on week ahead. As always, let's first check the previous week and data we had, and then we can go forward and check the week ahead. The week ahead, then the September, we're going to start the September. Usually, it's not such a positive month for the stock market. It's not a favor month. We are having we published probably we published the monthly outlook in website. You can read the fully monthly outlook for the September. In this video we're going to talk about the week ahead only, but the monthly outlook will be available in the website. You can read the full article on the website and about that. So at last week it was not such a busy week. Mostly the market was focusing on inflation data, especially from the United States, where we had a core personal income and spending, and where we had not just income and spending, we had personal spending inflation as well. Generally, the data from United States and at the same time, we had inflation numbers from other economies as well. Generally, the data that we had from the inflation numbers is that inflation is still increasing and still is the concerns in the markets. The thing is that on the monthly scale, data shows that we have still underlying concerns that we should take care about them. But on the other side, economic data, which is published from the most of developed and developing economies, excluding United States, showing that the economy is facing with much more challenges, and these challenges can put the central bank in more cautious position. For example, if we look at Japan, industrial production was weak. Inflation is slowing, but at the same time, we had the labor market increasing. But generally, the mixed data, but still, these data were very mixed. The same things almost we have in most economies, but in United States, generally the data which we had previous week, they were positive. They were showing that the economies united in the United States can hold the current high inflation numbers. Monday will be holiday in United States, but on other economies, we're going to have the manufacturing PMI numbers. Generally, we expect to see the manufacturing PMIs to increase slowly in August. In most economies, it's like that. But the service sector should give some weakening signal, especially in European countries. But manufacturing manufacturing in China is around 49.5. Headline manufacturing is around 50. But generally, non-manufacturing PMIs in China is expected to stay above 50 at 50.2. In Eurozone, unemployment level should stay unchanged at 6.2%, while the French manufacturing is supposed to stay around 49.8, 49.9 in Spain. Manufacturing PMI should stay around 51.1, 51.9, or around 52. In whole Europe, generally, if we look at Europe as not just the Eurozone, just like it's like United Eurozone. If you look at the separate economies, we can say that right now we have some issues especially in countries, more issues in countries like French, in Germany, and Spain and Italy. They are moving a little bit better. I mean, they're performing a little bit better. We can see that in PMI numbers in service sector which is going to be published on Wednesday. If you can see here, the service, for example, in Spain, the service PMI is around 55.1 previous month, but the service PMI in Germany was 50.1. While the service sector is moving better, is acting better, is performing better in countries like Spain, Portugal, and Italy, their manufacturing numbers almost the same with the French and Germany. Generally shows that these economies slightly moving better, improving better, just like performing better. But if we look at the whole Eurozone, we can say that the whole Eurozone still is still facing much more challenges. In China, manufacturing PMIs should stay around 52.5, between 52.5 and 52.6 and 7. Generally, the data from the China is going a little bit better and positive in the last 2 months. We expect to see better numbers in next months as well. On Tuesday, we will have the manufacturing data from United States, where we expect to see the ISM manufacturing stays around increasing slightly to 48.6 from previous 48, while the service sector also, which will published on Thursday, which is going to be published on Thursday in United States, supposed to service manufacturing. Service manufacturing is supposed to increase from 50.5 to 50 from 50.1 to 50.5. Generally, the both manufacturing and non-manufacturing or service sector service PMIs supposed to increase slightly better in United States. That can probably support slightly the oil prices as well. But generally, in United States, the focus will not be the manufacturing numbers also will be important, but the market focus will be on labor market data. Since Monday is a holiday, the GLTs was not going to be published on Tuesday. The GLTs numbers will be published on Wednesday, where we're going to see the GLTs to increase from 5,437,000 to 5,500,000. From 7,437,000 to 7,500,000, which means that the labor market, despite the recent slowing down, is still strong. Same things we expect to see on Friday's NFP numbers, where we are expecting to see unemployment rate to increase slightly to 4.3% from previous 4.2%. At the same time, average earnings should increase by 0.3% monthly and 3.9 or 4% annually, and participant rate is going to be around 62.2 or 62.3, which is fine. And non-farm payrolls supposed to increase by 78,000, slightly better than the previous month, but still under 100,000 newly created job means the labor market's moving slower than standard or slower than expected. And in Canada also, we expect to see unemployment to stay unchanged around 6.9 or around the 6.9%. We don't expect to see any specific changes there. On Friday, we're gonna have the retail sales numbers from United Kingdom, where we expect to see retail sales to increase by 0.2% in July after 0.9% increase in June, and factory orders in Germany should increase by 0.5% in July after 1% fall or decrease in the previous one. Generally, the data that we're expecting to see, the manufacturing sector in a week ahead, supposed to increase slightly better. The service sector in most economies are expecting to be disappointing slightly. In United States, both manufacturing and service sector supposed to increase from previous month, and the labor market unemployment rate at 4.3% should be still positive. I mean, that we are not going to. I don't think that we will have any surprise. The unemployment rate shouldn't be increased more than 4.3% and shouldn't be fall under 4.2% as well, or it can be unchanged at 4.2% or slightly increasing to 4.3%, but not lower than 4.2% and not higher than 4.3%. We shouldn't have any surprise there. As a market reaction, we can see that at the last hours of Friday, when the market started pricing more on rate cut in September, the dollar index slightly fell under 98, but still it closed at 97.8, not so much lower than it was, in line with our expectation of the weekly outlook to be traded around 98, slightly higher or lower for this week. In the first half of the week, we expect to see that US dollar index slowly increasing, but under 98. But in the second half of the week, when we are getting closer to the NFP numbers, we expect to see the dollar index again above 98. Take profit from stock markets at the same time, increasing uncertainty in the market, increase the gold demand. We know that the S&P 500 and other stocks, other indexes after recording all-time high on Friday, they slightly fell. with the taking profit or saving the profit by many traders and investors. At the same time, the dollar index also slightly fell. That supported the gold price to increase above 3,450 and close around that week. That level. Generally, the gold market is still positive, as we explained on the Wednesday's after U.S. inflation data and also the previous week's weekly outlook. Generally, the market expectations for the for gold is still positive, and I even thought if after this not all-time high, this new record high in past 2 months, if we see some correction, it cannot be it cannot means the market trend. The change in the trend, unless if the price fall under 3,330, but otherwise the market is still positive. Even if we see some correction, it can be the correction and buy opportunities, as we explained the previous week as well. As for the energy, next in next week, in the second week of September, we're going to have the IEA and OPEC monthly reports. But for now, the market's going to focus mostly on the PMI numbers for this week. PMIs, manufacturing, slightly positive PMIs can support the oil price, but generally the energy market is not too much in demand, while the outlook for the for the output and supply is still positive. That's why we expect to see the oil price again around 60, 62, 64 this year. We are not expecting to see any big changes in the energy market. As for the stock markets, first half of the week should be slightly, it's just like a side movement with a slight correction, but in the second half of the week, probably we're going to count more on positive labor market data, which can put the pressure on the stock markets. But generally, the market, for example, if we put the S&P 500 as an example, trading above 6,300 can hold the positive tendency in the market, and still we are in a bullish side, unless if the market fell under the 6,250, 6,200. Generally, the market is positive. On the cryptocurrency markets, all these changes and the taking profit and the correction especially mostly the take profits from new highs, putting the cryptocurrency markets, especially the Bitcoin price, under pressure. The Bitcoin fell under 109,000, trading around 178, 108,000. The price, if fall under 106,000, we can expect 102,000 as the next step. Otherwise, if the price can increase above 109,000, we can expect again the bullish side. Between 106 and 109,000, we're going to have the side movement, no specific direction. That's what happened previous week and what we are expecting from the week ahead. Don't forget to read the full monthly outlook for September in website. Have a good day. Bye-bye.